Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's July the 26th, 2018. I trust everybody's summer is going well, and hopefully everybody is getting a little bit of extra time with family to enjoy some vacation. Now, I just wanted to give a quick update in terms of where we stand in the middle of the summer. And so the following slides I'm going to stick to, and hopefully that'll provide a good outline of where we're at in terms of the market and some of the companies that we're looking at and investing in your portfolio. So the first slide is a disclaimer, and of course we have to stay on side with all of our legal friends. And then the next slide just talks about the main points that I want to talk about in this particular presentation. The first one is just this idea to focus on the real economy and businesses, and I'll make a few comments about that. Again, just reminding you of the sectors of focus that we are investing in, the areas that we see, above average growth and some good opportunities to create long-term capital value for our investors. And then third, just a few things about some of the businesses that we have, business-specific commentary. So let's just jump right into it. So first, the focus on the economy and on the businesses. I really need to emphasize this. We try to ignore, as I point out on this slide, 99% of the political commentary out there. And the reason you should ignore it is that it really is largely fake news. I cannot believe the massive amount of misinformation that continues to hit the market day in and day out. Now, much of that misinformation has to do with President Donald Trump, and regardless of your opinion of President Trump, one thing is for sure: the mass media is crazy when it comes to how they relay information about him. And in many cases, as we find out afterwards, much of what's said is actually not true. And there's no question that President Trump is trying to shake up many of the global relationships, trading relationships, the whole issue of trying to actually bring in free trade versus tariff management and so forth. So my point there is, it's very important to look at the underlying economy and not get too preoccupied by the politics, or you will be probably completely immobilized, if you will. So our focus is on the businesses and not the politics. And when we look at the businesses and the actual economy, they're actually plodding along fairly well. The next point I just make is that we need to remember there are increasing debt levels and interest rates are sneaking up. In fact, they're not really sneaking up. The central banks in many cases are lifting interest rates. And we just want to point out to our investors again that this intersection of increasing debt levels and increasing interest rates eventually is going to have some teeth, and it's going to impact our economy and slow things down. We don't know exactly when, but that means we need to be vigilant and we need to focus on good businesses that can weather ups and downs in the economy. But there's no question that that intersection will be painful at some point. And then the third point that I just have here in terms of focusing on the economy and businesses is that we are shifting from QE to QT. Now, what does that mean? QE is quantitative easing. That's printing money and super low interest rates. Quantitative tightening is stopping printing money, maybe actually even pulling some money out of the system, and increasing interest rates. And so as the central banks tell us that they're going to be backing off all this QE, clearly the Federal Reserve in the United States already has, but as other central banks like the Bank of Japan, the ECB, and so on, as they also back off maybe some of this aggressive monetary policy and become tighter, that too can create opportunities in the market and some volatility, and we need to be prepared for that. So again, we're focusing on really what's happening in the economy and not on what is being promoted on the latest segment of CNN, for example. Now, the next two slides just remind you of the sectors that we are zeroing in on and why. And this is very important. We're investing in the economy. We're taking longer term positions. We want to be in great companies and great segments of the economy that we think are growing faster than the overall economy. In some cases, maybe even 2 to 3 times faster than GDP. And that's very important then that we find great companies in those market segments. So on that first slide, you can see infrastructure, financial, technology, manufacturing. I've talked about each of these industries over a series of video presentations over the last couple of months. And on the next slide, we see precious metals, healthcare, agriculture, and water. So what's important there is that we are being very specific and deliberative in terms of areas that we're investing because we want to find long-term growth sectors. The last slide that I'm just going to mention quickly, it's just some of the businesses that we're investing in and how they're proceeding this year, and also within the second quarter, because right now we're in the middle of the earnings reporting season. So companies that have a second quarter ending the end of June, many of those companies are now telling us how they did in from April to June. And so on that slide, you can see there that the results of the companies that we're investing in right across the board are very good. They're excellent. We're very pleased with the results that are coming in. And so in manufacturing, we had TE Connectivity, which is a leading company in sensors, post excellent results and also talk about increasing their numbers over the next year and so forth. So we like that segment. Also, Honeywell had exceptional numbers in their aerospace division, also in their measuring and metering areas, and in automation. So a couple of newer companies that we've added to portfolios over the last year and a half, and doing very well and are in great spaces. Technology, we own a number of companies in the technology space. Alphabet or Google released their numbers. They were exceptional. And then this morning, we just got numbers from Roper Technologies, which we talked about in our second quarter report. And they blew out their numbers and are doing very well in terms of very specialized software for a number of important industry verticals. And every business now operates on software. And so we like Roper and its business model. Water businesses, Pentair had excellent results. And some of you in some of your accounts, we owned Pentair, and they split out their electrical division and called nVent. And so now you see two companies there, but both Pentair and nVent have now released their numbers separately now that they've separated those companies out. And in both cases, very good numbers, solid growth, and good prospects going forward. And then the last area is infrastructure. We have large positions in infrastructure, and I've just got three companies that I've put down here. We own more in the infrastructure space: Brookfield Infrastructure, Brookfield Renewable, and also TransAlta Renewable. These companies are doing very well. We're still waiting for their second quarter results. But I put these on the sheet because this year, sort of year to date, in all three cases, the stocks have been sloppy. They've been off a little bit. And sometimes investors will say, what's going on with these companies? And I just wanted to point out that the fundamentals of the companies are strong. They're actually doing very well. But they do pay high dividends. And companies that pay high dividends, when interest rates are moving up, often those companies will come down a little bit. There'll be a little bit of sloppiness or weakness in the stock prices because people will reprice them based upon a higher interest rate environment. And so my caution to our investors is focus on the businesses. They're doing very well. They continue to grow at great rates. They have very high and growing dividends. And any weakness in the stock prices we will use to acquire more of that particular stock at better valuations. So everything is trucking along quite well in terms of the portfolios, and I say that carefully because, of course, the market can surprise you at any time, but we have a great, diverse group of businesses in your portfolios, and we continue to focus and research looking for new ones to add, and also companies that we own that we might want to prune so that we maintain high-quality portfolios. Thank you very much for listening. Trust that was helpful. If you have any questions, please, you know how to contact us, and please reach out. Thank you very much, and continue to enjoy the summer season. Bye now.